Every once in a while, I have to just do a video where I have to just give advice out there and get everybody on the right track, prepare everybody for what's coming in this market, and some activity I'm seeing out there. And this is whether you're somebody with $1,000 to your name, you're just getting started in the market, right? Or whether you're somebody who's been running a portfolio for a long time, you got a $10 million portfolio. I'm going to give some advice out there that I hope everybody can take and really adapt this in the market moving forward, because otherwise I could see this kind of being a, let's call it a big issue for what we got to prepare for and things like that. So I hope you guys are going to really enjoy this discussion right at the beginning of this video. I think it's really needed out there, okay? After we get done going through that, I'm going to go ahead and react to Tom Lee. Tom Lee went on CNBC in the past 24 hours, shared his views on where the market's headed, why he believes that, and I want to share my opinions and perspectives from there. After we get done going through that, we're going to go ahead and talk some stocks. And I mean a lot of stocks in this one. We're going to probably talk about every single stock I own. We're going to also talk about some moves I'm seeing in some other stocks that are very interesting, some potential opportunities in the market, all that good stuff. So busy, action-packed video. There's one thing and one thing only I need from you. If you could please just hit that thumbs up button. If you could just make that thumbs up button glow and hit that like button, that's all I need from you. And for every single person that's already done that, thank you. I thank you so much. Okay. So, right off the bat here, okay, let me give some advice to everybody, whether you got a little money in your portfolio, whether you got a big dog portfolio, because I need to prepare everybody for what's coming in this market, some activity I'm seeing, okay? Listen. This is a sort of activity I'm seeing out there, right? This individual says Tesla stock's going to 4,300 by 2030, okay? Then we had some news like this come out here today. White House has issued warning and directs federal agencies to brace for mass employee firings. And people are like, oh, this means the crash is here. Like the whole economy is doomed. The whole market's going to crash now. All these sorts of things, right? And it's just so dramatic. It's just so dramatic. Like people are just so dramatic and so ridiculous. And the problem is, in the stock market, you've got to, if you want to really succeed in the stock market over the long term, and when I say the long term, I mean over a 20, 30, 40-year span, and you want to really build massive wealth in the stock market, here's what you actually form your opinions on. Math. I know, not the sexiest subject, and I didn't like math in school either, but at the end of the day, it all comes back down to math. You cannot just throw opinions out based upon randomness. Somebody's saying Tesla stock's going to $4,300 by 2030. They're not making that judgment based upon math. Somebody says, oh, the stock market is going to crash 50%. Are they making that judgment based on math, or are they just throwing something out there? You could say, let me tell you how to actually look at this, okay? If you want to know where Tesla stock's headed over the next 4, 5, 6 years, run your numbers. What's revenue growth going to likely go up, and why is it going to go up that much or down? What's a net income going to likely do? What is a fair PE ratio for stock growing at that sort of category? And that's how you got to make your justification. And under no circumstance, regardless of what happens between now and 2030, like Tesla's not a $4,300 stock. On the flip side, you want to say the stock market needs to crash 50% right now. What are you basing that on? We're at a forward PE right now of 23 on the stock market, right? The S&P 500. We have the biggest, strongest companies in that index growing at double-digit clips, top line and bottom line. So what is a fair forward PE? Is a fair forward PE really 12.5? When the most dominant companies that matter the most to the index are growing at double-digit, top line, bottom line? That doesn't happen. That never happens. Point me out companies that grow double-digit revenue and net income year in and year out, earnings per share year in and year out, and traded at 12.5 P. You're not going to be able to because it doesn't exist. The only companies that trade at 12.5 P or 12 P or 11 P or whatever you think the market should be at, forward P, you know what type of companies trade there? Ones that have revenues in decline or having trouble even growing their business and have a lot of questions about if they'll even be around 3 years, 5 years, 7 years from now. So to say 50% crash, it's just, you're just completely just throwing stuff out there. And this is the issue we have in this market right now. And I don't want you guys to get caught up into this thought process because it's just so extremist is the way I would put it. Kind of like the political sides are so extreme now. That's what I'm talking about with the stock market. People are just ridiculous. They're just like fanboying to one side or the other, the bearish side, the bullish side. There's no like let's actually run projections here. Let's actually think about the math. What would make sense in a situation? There's not a lot of intelligent discourse out there right now. It's just ridiculousness. And I think it's a lot of ridiculousness because the market's been pretty ridiculous the last few years. From the Rona crash to then all the stimulus money and the stock market goes booming, to then a 2022 crash and everything that happened there, to then the unbelievable bounce back in the stock market over the past really 3 years now at this point in time. It's just ridiculous. And so sometimes you got to understand that, listen, patience can pay. Patience can pay. You don't have to get into this mentality of like, every stock's going to 10x. This stock 10x is going to 10x. Oh, it's going to 10x the next 5 years. The market's going to crash 50%. You don't have to get into that mentality. You can look at it. You can say, hey, you know what? Market's trading at a forward P at 23. I think it deserves to be at a 20. I think we got 15% downside in the S&P 500 or whatever, right? Like, okay, that's a math decision. You say, okay, I think the stock's going to give me a compound annual growth rate of 15% per year over the next 5 years. Okay, how are you getting there? Math. The revenues are going here, the net income's going here, the net income margin's going here, the P ratio that's fair for a company that's growing at these sorts of rates in this sort of space. Boom. That's how you do it intelligently. And that's how you actually have confidence. Otherwise, you're not gonna have any confidence. There's no confidence, it's just ridiculousness, right? It would be like me saying the Las Vegas Raiders are going undefeated this season. Okay, could say that, but it's just a stupid thing to say. It's just ridiculous, okay? It's not based on any logic. It's just like, I'm emotional. And so when I see people, say all these different things, like I'm like, oh my gosh, it's so sad. They're just emotional wrecks. They don't understand math. And I'm like, in order to be successful over the long term in the market, you better understand math. You don't understand math, you're going to be in a lot of trouble in this game. The way I would put it to you is kind of like this, right? This is how people are a lot of times in the stock market. Like they're just all over the place, right? Like if it's a scale, it's like way on one side or the other side, okay? They're so either over the top bullish or so over the top bearish. It's just ridiculous, right? This is how you want to be in the stock market over time. Even keel. Okay, everybody wants to go risk on, the market's just climbing year after year after year, right? And the valuation's looking rich. Okay, be even keel. Look at it from a standpoint of, okay, market's probably a little bit ahead of itself and, there might be a price to pay for that in the next bit of time, and that's fine. On a perspective of like everybody panicking, selling their stocks left and right, take a standpoint of like, yeah, this is bad right now. There's a lot of fear out there, but you know what? I'm going to take advantage. I'm going to choose to be bullish over the long term, and I'm going to buy stocks because I think this stock's a deal, this stock's a deal. And how do you know that stock's a deal? Is it because it went down 50%, 20%, 30%, 60%? No, that's not how you know it's a deal. You know how you know it's a deal? Math. You got to go back to the math and say, okay, revenue can probably go up this much per year under a bull case assumption, under a base case assumption, under a bear case. Boom, run all your numbers. And then you begin to understand, okay, this stock's a great deal, or you know what, this is a ripoff. That's how you play this game. Don't be an emotional mess in this game. Otherwise, you'll end up with emotional returns. And emotional returns are not good returns. They're not good returns. And so keep that in mind, folks. Be even keel in this game, and you're going to likely end up doing very, very well for yourself over the years. And you'll make a ton of money in the bull markets, and in the bear markets, you're not going to go under, which is half the battle. Like people forget, when you've been in a bull market, remember, we've been in a bull market now for basically 3 years, right? Obviously, we've had corrections along the road and pullbacks, things like that. But really, we're in a 3-year bull market now, okay? When you've been in a 3-year bull market, people forget about the bear markets. They forget bear markets exist, a market where, downtrends for 6 to 18 months straight. And every time you think it's coming back, it just ends up going lower. People forget about that. No different than when you've been in a bear market for a while. People start forgetting about the bull markets and how unbelievably powerful the bull markets are. Bull markets, by the way, are way more powerful mathematically than bear markets. People romanticize the bear markets Oh, the great financial crisis. The indexes fell 50%. The Rona crash. Oh my gosh, S&P 500 went down like 34%, like in a snap of fingers, blah, blah, blah. They romanticize these time periods. What happened in 2022, right? The Great Depression, like they romanticize these time periods. But what they forget always is mathematically, the bull markets are so much more powerful. Like it's not even remotely close. Like you could see a chart looking at bear markets and how powerful they are versus a bull market. It's not even in the same stratosphere. It's ridiculous. And so, because a bull market is like a never-ending tidal wave that just, I shouldn't say never-ending, but it's a tidal wave that just continues to dump ocean water on you again and again and again, year after year after year. Whereas a bear market is like one big wave that might hit you, and then that's it. Okay? So, because bear markets usually last 6 to 18 months. And yeah, it's not fun to go through in the short term, but at the end of the day, like it's the best buying opportunities you get usually for the next 10, 20 years. Look at the great financial crisis, right? Like about as brutal of a bear market crash you could get. All the indexes went down 50% plus, right? Brutal. It was the best buying opportunity we've seen in stocks in the last, you have to go back all the way to the 1980s. To see a buying opportunity that phenomenal. It was unbelievable, right? So be even in this game, guys. And you're gonna go pretty far for yourself, okay? Hope you guys enjoyed that little piece there, okay? All right, let's get into Tom Lee, then we'll do some stock talk.
It's good to have you back. I know you love this trade. But what do you make of what Mr. Griffin had to say?
Well, I agree with him. You know, we're in a period where there is a super cycle and exponential growth opportunities within AI. But it doesn't mean every company that has an elevated valuation today deserves to actually have the capital, and that company may not even reinvest that capital properly to be a survivor. So I agree there is going to eventually be a shakeout, but I think valuations, strangely enough, are actually pretty reasonable today compared to 1998, because 1998 was that liftoff point before that final 18-month surge. And I'd say the best benchmark is NVIDIA trades at 26 times forward earnings. Cisco at that same exact moment was at 60 times, and Cisco's PE peaked at 210 times forward earnings. So NVIDIA to me is still a bargain at 26 times. It's cheaper than Costco and Walmart, which are close to 50 times forward earnings.
Sure, but all valuation.
You know what I like that Tom Lee did right there? Do you know what I absolutely love that he just did? He brought up math. Oh, it's brilliant. It's brilliant. He brought up math. NVIDIA trades at a forward P of this. Here's what Cisco was trading at if you want to compare it back to in the tech bubble days, right? Here's Cisco's PE versus Costco versus Walmart, those sorts of things, right? It was beautiful. That's beautiful. And that's how you play this game. That's how you play this game. It's a math-based game, right? You got to try to get your emotions out of it as much as possible. Math matters.
Isn't created equal. And I'm not especially clear as to whether Mr. Griffin looks at the valuations of.
But let me push back against Tom Lee here, okay? Because he brings out an interesting point. He says, NVIDIA's trading cheaper on a forward P basis than, let's say, Costco or Walmart, and obviously NVIDIA's growth rates blow those companies out of the water. Here's where I'll push back against Tom Lee, okay? He's right in regards to that. But the difference is Costco and Walmart no one's worried about like Costco and Walmart sales being in a bubble and like their revenue start to plummet in 27 or 28. That's not a realistic worry about Costco or Walmart. But that is a realistic worry in regards to NVIDIA. That does not mean it's going to happen, but we know these chip cycles last 3 to 5 years, and then there's a painful part of that chip cycle that comes after that. And so maybe this is totally different and like NVIDIA just grows to the sky in 27, 28, 29. I doubt it as well. I doubt it happens. I think there's going to be a time period where NVIDIA's revenue might even go negative, might start going down, right? What year that is, that's tough to predict, but I think that's a realistic possibility. And so that's why people are not willing to pay a great premium like they would, let's say, a Costco or Walmart, because Costco or Walmart is going to put up their numbers regardless. NVIDIA, when you're in one of these big chip cycles and everybody and their grandma, all it would take is let's say we get a market decline, the economy gets hit, let's say some of these AI programs aren't taking off as rapidly as you might have thought, Could these companies, the Metas and the Googles and all these companies, start pulling back on chip sales in 27, 28 from NVIDIA? Sure. Could they start going with a more cost-effective option like AMD? Absolutely. That would all hurt NVIDIA, right? And so, could more of these companies start doing more and more custom solutions like Amazon and Google are doing? Sure. Like, these are all things to factor in. So that's my pushback there in regards to, NVIDIA and why people are not willing to pay a big forward P for a stock that has had insane growth the last few years. They believe, there's a realistic potential that fades in the next, let's call it 2 to 3 years.
With NVIDIA, for example, and says, well, that looks a little out of hand. It reminds me of late 90s activity before the dot-com bust happened.
And that's why I said, for a long time now, what have I told you guys in regards to NVIDIA? NVIDIA's just stuck. It's stuck between about 125 and about a 200-ish level. And that's just what I think is going to continue to happen with that stock. When people are feeling great, it's going to bounce up to that $200 level. And when people are feeling down and out in regards to NVIDIA, it's going to go down to about 125. And I think it's going to be there for years. Not a few months. And I've been saying this for a while now. I think I've been saying this for a year now at this point in time. The stock is just range bound. And the reason it can't, why can't NVIDIA go $400 or $500? Because I don't believe people are going to think this chip cycle is going to continue to go up 20, 30, 40, 50%, 27, 28, 29. If people became confident in that, then you could say, okay, NVIDIA could go $300, $400, $500. But outside of that, people just won't be willing to pay a big price for NVIDIA.
As much as he looks at other names which have gone, parabolic and they're related to AI. And that's where he says, whoa. We're placing way too many bets on what might happen in the future. We think we know what's going to happen in the future as it relates to NVIDIA and some of the other hyperscalers, but it's a whole host of other names that have literally ripped over the last 3 months, at least, that might bring investors a little bit of pause.
I think that's correct, Scott. There's a difference between a company being scarce in the public market. Like, let's say there's an IPO of a company and it's the only way for you to get exposure, versus that company being truly scarce to the ecosystem. So I do think investors have to discern, is this company going up a lot because this is the only name out of a possible bevy of private companies, or is this the company truly unique and one that is so scarce, I got to give it the N=1 valuation?
I mean, I think he looks also at a stat like JP Morgan Asset Management's Michael Sembalist brought to us today from his report. And he's good at what he does, okay? Quote, AI-related stocks have accounted for 75% of S&P 500 returns, 80% of earnings growth, and 90% of capital spending growth since ChatGPT launched in November of 2022. Now, some would say, well, obviously, and all of that might be justified, but those are large numbers. Those are really large numbers that have carried a boatload of the weight of this move in the market since then.
Yeah, and that's a moment in time, Scott. I mean, just to give some perspective, NVIDIA is about 8% of the S&P 500 market cap weight, but it is also 7% of the earnings. So it's not necessarily distorting equity valuations. And in terms of what companies are excited about, if companies are saying that AI is something where they're actually allocating capital, and many are, of course, are seeing productive gains, I think it's justified that would be what you'd expect to be the first wave of investment and spending, is around directly into the ecosystem. But of course, over time, we'd expect that spending then to deliver productivity gains and other benefits. So that means if AI, and I'm comfortable with the idea it's a super cycle, we should see a broadening of the benefits and then also the broadening of opportunities over time. So it's probably a moment in time makes sense, but it should be broadening.
I mean, I look at a stock like Oracle, for example, only to pick it out because it's up more than 30% this month. Now, it obviously had the moment around earnings where it added such a tremendous amount of market cap after that event. I bring it up if only because it was initiated sell today at one firm on Wall Street, in part because they suggest that you've got some really aggressive assumptions that are coming with this stock. Now it's down 5% today because a lot of these names in what you would consider the momentum basket have rolled over a little bit. But the notion that the assumptions are so big that there's inherent risk in and of itself within that.
Scott, I think that there is going to be moments where it feels like we're possibly topping, and today is coming at a time when we have this Oracle report and stocks are generally soft. But number one, I think it's always really healthy to see corrections in a super cycle. But I do think it's really difficult for someone to actually ring the bell at the top. And in fact,
always.
if we look at Palantir or Tesla or NVIDIA, I think that there have been, 25 bell rings at the top at every waypoint along the way. To me, I think the real test is going to be that we see a day where investors are convinced there's absolutely nothing that is wrong with the thesis and it's bulletproof, and yet stocks make announcements and they go down and companies actually have negative returns. I have not seen that yet. In fact, to me, it's reflexive to see that every time markets flatten out after posting gains, we have a lot of people declaring the top. To me, that's a really healthy sign that there is very little conviction about this bull market, and I do think it's healthy to actually see the skepticism. So I'm not opposed to seeing these reports, but it's healthy.
Do you think that equities are especially vulnerable here, as we wrote in our intro today, as BTIG suggests?
Before we go further here, the problem, to get back to NVIDIA, chip sales, everything going on there, a big problem for somebody like NVIDIA could be, let's say, I think, my guess is, based upon mathematics, is I believe ChatGPT, in terms of the growth rates it's been showing, it's going to slow substantially in 26 and then slow even more in 27. That does not mean all of a sudden no one's going to use ChatGPT. No, it doesn't mean anything like that. It's just, if you look at the growth rates of ChatGPT in 2023, obviously off the charts. It's like a new thing, everybody is starting to download it, start to use it, right? 24, unbelievable. It starts to kind of reach more mass level, 25, even to another level, right? But I think as we go into 26, 27, the growth rates will start to slow substantially. Now, when those growth rates start to slow substantially, that's when investors are going to be like, wait a minute, the company's already valued at $500 billion. Are they going to try to value it at 600 trillion or 600 billion, 700 billion? I don't know if I'm willing to pay for that because the growth rates are now down to this number, right? Because people start running their projections and their math, these investors, and they start saying, what? I don't know. And then so maybe ChatGPT doesn't get as much funding, which then means they don't buy as many NVIDIA chips, which could, maybe this is already happening. You see an investment by NVIDIA into OpenAI, that was a little strange, right? Okay, interesting. So maybe this is already a situation that's starting to play out behind closed doors. I'm not part of those OpenAI investors discussions or the NVIDIA investor discussions that go on behind closed doors, but this is a potential that it's already starting in regards to that, right?
They are the most since the April low. Do you feel the same? I should also mention it comes within the same context of commentary recently from the Fed chair, who didn't go out of his way when he answered the question about the equity markets to suggest it's wildly overvalued. But nonetheless, he did say that stocks are fairly highly valued. He could have said, I think they're fairly valued. He didn't. He said they're fairly highly valued when he answered that question. You put that into the mix, too, when you consider your answer.
Yes. Well, I have a lot of respect for Fed Chair Powell, but I don't remember the last time any FOMC member actually said stocks are attractively valued, because I don't think it's their job to comment on equity valuations that way.
Fair.
And if we think about where, again, market valuations are, I'd be very concerned if the most important stock, like NVIDIA, was trading at a multiple that couldn't deliver returns. But it's the most important company in the world, 40% plus revenue growth. It's trading at 26 times forward earnings, which is hardly demanding for a company that makes a product that every single company in the world that is involved with AI actually needs. They can't replace it with anything else. So I don't think it's expensive. When you ask about April lows and valuation vulnerability, I think there's really two big differences. One is monetary policy was actually quite tight in April, and the risk was actually the Fed wouldn't even consider intervening, and yet markets managed to stage a 30% rally. Today we have a Fed that's not necessarily pounding the table that it's in a dovish cycle, but they've understood that they need to now use their hand to support employment. That's a sea change, actually, and as we know, ISM's been below 50 for 31 months. It's the longest stretch in the history of the ISM index. I think if the ISM breaks above 50, that's a recovery in confidence in capital spending. That would support a broadening of the economy, and I think that would be good for equities.
Well, speaking of Fed policy, and you stay with me, Tom, for a moment, Ken Griffin also gave his outlook today for what he thinks the Fed will do after cutting rates.
So the one other thing people haven't really, I don't think enough people are factoring in regards to NVIDIA and where numbers go, but I think it's being factored in the market. That's why I think you're seeing NVIDIA's forward P where it's at. I think it's really twofold. One is the reasons I spoke about before. The second part, why are people not bidding that stock up, right? Look at how great the numbers are. We know the numbers are going to remain great for at least the next year. Why are they not bidding it up? It's the most well-known stock in the market. Like, should be easy money, right? Like, why are people not bidding up? The other factor that I think the market knows is finally NVIDIA's actually got competition. NVIDIA's had no competition the last several years. The competition's here, and it's with AMD. You look at the 350 series AMD has, they're in the game now. And in the 400 series coming next year, serious competition now. So it's no longer just, it's NVIDIA's game and there's no one else there. They actually finally have a competitor in the market. And, if people aren't taking AMD serious, I would start taking AMD very serious, very quickly. Very serious, very quickly. Ask anybody that's underestimated AMD the last 10 years. Ask Intel. Ask everybody. You do not underestimate Lisa Su and that team over at AMD. They get it done, and she's now, through the acquisitions they've done, through the developments the team has done there, they've got themselves in a good position to actually really battle it out with NVIDIA over 26, 27, 28. So you could have a twofold kind of issue going on with NVIDIA, and that's why people aren't willing to pay 50 forward P on that stock right now, like you might think they would, given the growth rates of that company. Because they're like, could have a slowdown in the chip cycle overall going, and then you got AMD finally becoming a serious competitor, and NVIDIA hasn't had any competitors. That leads to margin pressures. You get margin pressures, then you could get earnings per share pressures, especially if your revenue is flatlining or going down. All of a sudden, now people are like, oh my gosh, it's a business in decline rather than it's a business growing revenues at 50, 60, 70% clips. Something important to understand there, okay? No, as far as some stocks go, let's talk some stocks, some opportunities, some things I'm seeing out there that are interesting. Celsius continues to roll the stock now at 99% so far this year. And when it comes to Celsius, the growth rates are insane. Like, this is a company that should be putting up triple-digit type growth rates for, honestly, at least the next probably 4 to 6 quarters. So, and then after that, we'll have to see where things even out at. There's a potential the company will probably, my guess is after the next 4 to 6 quarters where they come in with this triple-digit revenue growth quarter in, quarter out, my guess is after that, this is a company that probably grows revenues, I would say in like the 8 to 15% range a year, right? A really good year for the company, the revenues grow about a 15% clip, a really bad year, 8%. But the thing is, in this next 4 to 6 quarters, we don't know, I'm pretty confident they're going to be growing triple digits, but how strong in triple digits? Because that's going to change the whole trajectory of where Celsius goes over the next 3-5 years. Because let's say they grow in revenues at 150% clip the next 4 to 6 quarters. Woo! If they're growing at like 105%, that's a big difference. Big difference. And then, if you're growing an 8 to 15% clip after that, that's going to be significant. I mean, we're talking about hundreds of millions of dollars of potential extra revenue or not. So the one thing I'm confident with Celsius is it's going to be like a triple-digit revenue grower for, at least the next 4 to 6 quarters. And then after that, probably toning it down to like a like a 8 to 15% type range, somewhere in there roughly. If they really knock it out of the ballpark and then we could be talking about a company that grows like 20%, but I don't want to hold my breath on that. But we do know there's a lot of international expansion ahead, right? Estee Lauder is in the midst of their big turnaround. We all know that, right? So EL, I can't wait to see their numbers in 2026. They should start to grow revenue again in 26. And on top of that, they've obviously done all the cost-cutting measures. So what we should witness from Estee Lauder is revenue going up, simultaneously margins going up at a much faster clip, and earnings per share going up much faster because the cost profile of the business is going down, right? Revenue goes up. What's going to happen to your earnings per share and your margins? It's going to explode, right? So the math is going to be looking very fun for EL in 26, in my opinion, right? You might even start to see it, honestly, this next quarter they report. You might get like an early glimpse this next quarter, and then it's going to get more fun. Winning Resorts continues to win. Like, my gosh, just a beast, right? Stock up now almost 54% this year, far outpacing the S&P 500, far outpacing the Nasdaq, and heck, I think Wynn's even beating Nvidia, which is incredible, right? But when it comes to Wynn Resorts, people really want in that stock because of the Macau optionality there. And a lot of folks are very confident that the math is going to be looking very good in Macau for the next few years. And so if that plays out the way it could play out here, like Wynn's profitability could increase rapidly over the next year or two. And then if you get lower interest rates along with that, then we're really talking, right? Fubo up to 420 here on Fubo here. Everybody's waiting for that deal to close. So exciting in regards to that. Adobe's just been kind of chilling out. Salesforce and Adobe are two stocks that right now, I love them. I just want to buy every share in sight of those two particular stocks right now. They're very attractive forward Ps right now. Based upon my projections on both those stocks, there's a lot of upside potential in both of them over the next 3 to 5 years. So I like them both, man, and I feel very comfortable in them. Amazon continues to be a buy. Listen, here's a simple thing in regards to Amazon. Amazon's been a buy every year since 1996. It's the same thing. Like, there's never not been a year where Amazon stock was a buy. Never. The peak of the tech bubble, it was a buy. You say, well, it went down 90% in the tech bubble. Oh my gosh, at the lows, it was down 90%. Still buy. You bought at the very peak of the tech bubble, you still made ridiculous sums of money. There's never been a day, a week, a month, or a year where Amazon stock was not a buy. And that continues to this day. It's still a buy. There will be a day when Amazon is no longer a buy. But it's not in this decade. Like, at the earliest, you're talking maybe 2030s or 2040s in regards to that. The e-commerce business is just going to continue to grow. The logistics business is just going to continue to grow. AWS is just going to continue to grow. The advertising business is just going to continue to grow. I was just watching the game on Prime last night. They're showing ads that you can literally just hit a button and then it goes to your phone and you can buy it right there. Like, it's just insane, man. And they continue to have, a phenomenal innovation team there. They've made some great acquisitions. And so that one's going to continue to be a buy for a long, long time to go in the future. Now, if we look at big tech here today, Oracle continues to struggle. People don't believe really, I think, in a lot of those Oracle numbers they put up. Oracle stocks had a great year. I mean, look at this, up 70% this year. But look at the last, little bit of time here. Ever since that rocketing of the stock, right, after those earnings came out, I mean, the stock's down almost 17% since then. So even if we pull up like a 5-day here, on the past 5 days, Oracle stock's down 8.5%. That's a big down move. Like, how much is the S&P 500 down in the past 5 trading days? Let's take a peek at this. It's down 0.2%. 0.2% the S&P 500 is down, and Oracle's down, let's see, past 5 days. Oracle's down 8.5%. Oh no, the S&P 500 is down 0.16%. And yet Oracle's down 8.54%. So people, I think, have a lot of trust issues with Oracle numbers, and I think for good reason. You look at some of the stuff that came out with Oracle in the tech bubble. Look into that sometime. Google it, okay? Go on Gemini. Go Gemini it someday, okay? Little fishy in regards to that. Shopify's up to 140. Their growth rates have been extraordinary. They've been growing at a very, very strong 20% plus, which has been extraordinary. AMD continues to kind of just be, AMD's kind of stuck in this 160 range right now. It seems like it goes, 155 to 165 right now. It's just stuck. my opinion is, as we get closer to the next quarter numbers, you could probably see momentum there. But when the next quarter numbers come out, wait to see the guide. The numbers are going to be extraordinary. AMD is going to report. I think they're going to report much stronger numbers than what analysts are expecting. But then the guidance, I think, is going to flip some people's flapjacks out there. And so AMD is on its way to 200 plus, right? As far as other than that in big tech, I don't really have too much else to comment on here. I mean, MU reported a great quarter, but MU stock is just a brutal stock. It's always been a brutal stock. They can report great numbers, but then people are always like, well, next quarter or next year, the numbers are going to start going down. They're always, at the end of the day, they're kind of like an NVIDIA in that sense of like, they go through these boom and bust cycles and people are scared of them, kind of like the home builders, right? RH got hit today, almost pushing into the with a 1 in front of it. I think it should already be there. There's possibilities of a bunch of tariffs coming on furniture items. RH makes a lot of its products, I'd say a ton of their products outside the United States of America. And so how those tariffs hit RH is not going to be good because RH, it's not like they've had great numbers as it is. And then if they have to deal with tariffs on top, it's not a good situation at all. So RH just continues to be a brutalized stock, and for good reason. They ruined their balance sheet. The company had a great balance sheet. The CEO decided to ruin it, and they deserve what they're getting. Like, make a really bad decision as a CEO like that. Like, you get what you get, and that is what it is. Other than that, everything else in housing kind of, even Enphase continues to falter. That stock's just been obliterated. That was one of the most hot stocks in the stock market a few years ago. I mean, I remember so many people were trying to talk me into buying Enphase stock back here in 2022, right? Because it was one of the few stocks that was actually doing good back then. Literally, Enphase was one of the few stocks that was actually doing good back in that 2022 time frame. Like the market bottom in 2022 around that October time frame, right? You go to November on Enphase. Enphase is a $300+ stock. I had so many people trying to get me in that stock. Oh, solar to the moon. I'm like, I don't think so. I think there's going to be a huge come down period. I thought Enphase was just really benefiting massively from a ton of people upgrading to solar, really in that 2020, 2021 and into 2022 timeframe. A lot of people moving. And it was just a hot market and interest rates were insanely low. And I thought it was just kind of a temporary thing, and 100% it was a temporary thing since that time period. And Enphase stocks are down around 90%. 90%. And then you hear how anti-solar the president is. Whew, brutal. And so Enphase, man, that's another example I'm giving you guys here of you can't get caught up into these things when they're the hottest thing and people only see the upside, right? Because I'm telling you, in 2022, you had a stock like Meta trading under $100. I was buying that stock hand over fist, right? I could have easily deployed that money into Enphase at the time because Enphase had the hype. Enphase had the stock that was being a beast. Enphase was loved. Everybody loved Enphase. Meta, no one liked it. Everybody hated that stock. They said I was crazy. I remember putting, I think I invested like over $70,000 in Meta in one trading day. People said I was crazy. What? No one likes that stock. It's the worst. Look at Zuckerberg is spending on it, right? Oh my gosh, I made 7 figures plus on Meta stock. If I would have put all that money in Enphase, I would have a negative 90% return to show for it. That would have completely changed the public accounts returns. Like literally that one decision to go with a stock like Meta over a stock like Enphase, oh my gosh, I could have ruined the portfolio. Like think about that for a moment. I could have ruined the public account. But since I went with the right stock, the rest is history, right? So keep that in mind, folks, man. You play this game on the wrong side, ooh, it's brutal. Ooh, it's so brutal. Don't get, when these things are in a hype cycle, just understand, and everybody's talking about it, and everybody loves it. Be careful. Be very, very careful. My possible buys watch list here. I'm wondering if I should take a few stocks off this. Like Bucks. I like Bucks, but do I really want to own Starbucks? I don't know. I mean, they got so much competition with Luckin Coffee in China. Luckin looks like they want to expand in North America. there's a competition I've been talking about for the last 6, 7, 8 years on the main channel, which is Dutch Bros, right? I don't know if I really want to own Bucks. And their balance sheet isn't great. The thing, you know what could really make me want to buy Starbucks is if they actually had good food options. Like that's the one piece I've always thought was missing with Starbucks. If they could, like, you know, Brian Nickel, the CEO of that company, if he could like get Starbucks to make a few good like food items, like fresh, made in the store, not like, you know, what they do now, like open the package and throw it in a microwave type thing. No. Like you actually you get just a few options of food items, but they're actually really legit good. And I think that would be a game changer for Starbucks, but it seems like they don't want to go down that route. I think I'm going to delete I'll keep it on the possible buys watch list for now, but I kind of want to delete it. SoFi's still on there. Cava's still on there. Whirlpool's on there. Nike, Google, Amazon, Target, Cheesecake Factory, CRM. I might have just bought some CRM here today. Snowflake, Hershey's, Adobe, Wynn Resorts. LVMH is on there as well. That one's been interesting. Bath and Body Works. Alrighty, guys, I appreciate you joining me as always. Thanks so much for being here. If you want access, do you want access to all of my premium courses? My Becoming a Master Stock Market course, Millionaire Playbook, my Stock Options Mastery course, How to Hedge Portfolios, Dividend Investing Mastery course, my Financial Statements Mastery, teaching all the math stuff around this. Pin a comment down there. Click on that. Fill out a form. That will be to apply for access to my private stock group and private wealth group, as well as get access to 1000xstocks.com, where guess what? You can run the math. You can run your projections. We have the projections tool for intermediate projections and advanced projections. Run all your numbers. Make sure your math checks out. This is a game of math, not a game of emotion. Okay, appreciate you guys for being here. Much love and have a great day.